Welcome to JM Financial Mutual Funds Equity Outlook. In this short video, we would take a look at how different economic and market factors behaved in the recent past. We would also look at our view on the Indian equity markets, which may in turn impact the positioning of our schemes. The Nifty index was flat for the month ended January 2024. The Nifty Mid-Cap 150 Index and Nifty Small-Cap 250 Index outperformed the large-cap indices and were up by 4.7% and 7.3% respectively. Sector-wise, Nifty PSE 10.4%, Nifty Energy 9.8%, and Nifty PSU Banks 9.8% were the top-performing indices, whereas Nifty Media minus 9.9%, Nifty Private Bank minus 5.2%, and Nifty Bank minus 4.8% were the laggards. Global indices ended the month of January 2024. On a mixed note, Dow Jones and Nasdaq were up by 1.2% and 1% respectively, and Financial Times Stock Exchange 100 was down by 1.3%. The India Volatility Index VIX saw an increase in January 2024. It was at 16 compared to 14.5 in the previous month, up by 10.7%. The Chicago Board Options Exchange VIX saw an increase in the month of January 2024 and was at 14.35 as against 12.45 on December 2023, an increase of 15.3%. Foreign institutional investor were net seller for the month of January 2024. Net foreign institutional investor outflows were rupees 27,151 crores. Domestic institutional investor bought stocks worth rupees 27,463 crores. Whereas mutual funds were net buyers worth rupees 20,943 crores. Nifty PE is now trading one standard deviation above the mean PE, however it is still 10% below its peak. Nifty Mid-Cap 100 PE is trading one standard deviation above the mean PE, however it is still 13.2% below its peak. Preliminary analysis of the interim union budget ahead of elections indicates that allocation to infrastructure and capital expenditure continues to receive an important thrust along with fiscal discipline. Other than some incentives to renewable energy, the government continues to improve its fiscal health, bringing down its fiscal deficit to 5.1% in FY25 and 4.5% in FY26. This would imply that interest rates would remain in check, allowing for capital formation in the private sector. Both direct and indirect taxes continue to remain at the previous levels, indicating there is limited impact on corporate earnings due to taxation. Elections may cause some blips here. About half the world's population will be voting to either retain or change their government. This could change terms of global trade and other issues such as immigration, taxes, and inflation. Indian elections will be held between April 2024 and May 2024 to determine members of the 18th Lok Sabha, the lower house of the parliament. It is expected that the incumbent party, the BJP, will continue to hold its majority status, kindling hopes of continued reforms and fiscal discipline. Our analysis suggests that post-elections, euphoria fades and markets correct gradually. Will this happen this time? Given where valuations are, a correction may be possible. Of more importance is the American elections held towards the end of the year. The current election outcome looks uncertain and could have profound impact on global trade and partnerships. India has gained in stature in the global context, but it needs to win in global capital allocation tables. There are some signs of international companies wanting to invest in India, but there is a need of sustained inflows to create the necessary employment to reap benefits of demographic dividend. We remain cautious on the outcome of U.S. elections. Will the new president reverse the global trade flows and be more protectionist? The post-COVID and the Russia-Ukraine war induced supply shocks have normalized and inflation currently appears to be under check. In both India and other regions, China continues to face benign inflation due to its lower economic growth. Will this continue? Food inflation in India continues to remain a worry, and the current water levels in reservoirs are below historic average levels. A weaker monsoon could induce a sharp increase in food prices. Wholesale price indices also indicate that commodity prices are now looking up gradually, and benefits of lower crude and metal prices are already factored. In the US, strong capex and infra spends are keeping labor markets tighter than expected. The Federal Reserve was expected to cut rates in 2024 in at least 3 tranches, but this seems less likely now. This could affect sentiments for equity markets and may reduce flows into emerging markets such as India. We maintain our positive stance on Indian equity markets, but caution is required as volatility has increased. The 50-day moving average of India VEX, or the Indian Volatility Index, has increased from 11.3 to 13.6, with higher intraday movements. We anticipate a tighter liquidity regime, although the Reserve Bank is maintaining rates but is quick to remove excesses in the system. The recent moves to limit consumer loans may dampen consumption and shift resources for the ongoing capex recovery. Valuations suggest that cheaper public sector stocks could continue to outperform due to renewed investment cycle, and consumer-led financial services may lag. FPI flows may remain choppy as global macro uncertainties prevail. Corporate earnings are coming off a high base and may be impacted by the current Red Sea crisis, which has affected shipping costs and delivery lead times. Nearly 50% of exports and 30% of imports from India pass through the Suez Canal, passing the Red Sea. This could compress margins for importers and exporters alike. India's growth in 2024 could increasingly come from the domestic economy and capital formation. We also expect that housing recovery shall sustain. It is anticipated that significant investments in renewable energy to continue. A general recovery in manufacturing is likely to sustain, and we may position our portfolios to benefit from this trend.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.